Welcome, everyone. This is the 75th episode of Women on Wealth. Holy cow. I'm Jelena Ogilvie. And today's topic is protecting your assets with an umbrella policy. And as a financial advisor, we spend a lot of time talking to clients about how to better protect our wealth and our assets. And so today we want to delve into what an umbrella policy is and then offer some insights that can provide, how it provides an extra layer of protection on our wealth. And so to do that with me is I have today Devin Wells, who is a private client and family office insurance advisor with Howard and Gay Insurance based here in Connecticut. So Devin, hello.
How you doing?
Good. I'm thrilled to have you on. You and I have had this conversation multiple times, and again, I don't see enough individuals having this type of policy that should, and I know that you are helping me with some of those right now. So thank you.
Absolutely.
Yeah. So let's dive into this because I think there is some misunderstanding as to what exactly an umbrella policy is and how it works. So can you talk about the basics first? About what is an umbrella policy and how does it differ from other types of insurance coverage?
Yeah. So an umbrella insurance policy is a type of personal liability insurance that provides additional coverage beyond what is typically covered by a standard homeowner's auto or watercraft policy. So on each of those policies, you'll have a limit of liability. For homeowners, it's typically 300,000 or 500,000. And of course, for auto, it can be anywhere from 100,000 up to 500,000. It offers protections against claims and lawsuits that exceed the limits of other insurance policies, such as property damage, bodily injury, and personal liability.
Okay.
Yeah, and one of the main differences between the umbrella policy and other types of insurance coverage is that it provides a broader coverage and higher limits of liability.
Okay. So is it fair to say it sits on top of the other policies?
That's
Is
correct.
that the way to think about it? Okay.
Yeah.
Okay.
Yeah, and it also covers claims that might not be covered by your standard insurance policy, such as libel, slander, and false arrest.
Oh, okay. Yep. Interesting. And what type of liability risk does it typically cover? I know you just started to allude about how it's a little bit broader.
Yeah, so it covers bodily injury, so medical expenses, legal fees, and damages resulting from injuries to others caused by you or a member of the household, property damage for repairs or replacement costs for property damaged by you or a member of the household, personal liability, so legal fees and damages resulting from lawsuits alleging libel, slander, defamation, invasion of privacy, or malicious prosecution. If you're a landlord, it has landlord liability coverage as well, so legal fees and damages resulting from injuries or property damage that occur on rental properties you may own. And yeah, it's really just a broad coverage that better protects you and your assets.
And what if someone has an older policy? What are some of the benefits of maybe looking to update that policy? Has it really changed much in the last 10 years?
I think that, within the last 10 years, typically wealth and assets will have accumulated and grown without even realizing it. So that original policy might not be covering all of your assets in an adequate manner. So I think it's always beneficial to, even with your insurance advisor, have a yearly review that takes a look at your assets, what your current risk is, and then assessing whether they need to increase the limits on your liability policy.
Okay. And is there other types of coverage that are now included in these umbrella policies that maybe haven't been in the past?
They definitely have included, some of our carriers offer, board of director liability coverage. So if you're sitting on the board of a company, that's something that's brand new. It's within the last 5 years, I believe a lot of them have begun offering it. So I would definitely take a look at that. There's smaller coverages that may have been changed or altered, but it remains the same, that it's really just sitting above you and your assets and your rest of your family to provide that coverage. So
Okay. And who typically needs this type of coverage? This is the question I get all the time.
yeah, a lot of people think that if you're the mega wealthy need this type of coverage and everyone else is sort of fine without it. But I think if you're a homeowner, if you have, young children, maybe college age children, high school age children that are driving, if you have, significant assets in the forms of, if you're buying expensive items for your home, that all of those things need to be covered. And so this policy really sits above you and your family as just another peace of mind coverage that is necessary for anyone of any wealth level.
Okay. Yeah. And I know I'm just thinking back to some of the conversations that I've had more recently with individuals. If you can clarify, should this type of coverage involve retirement assets, for example?
Absolutely. You in the event of a high volume lawsuit where somebody is sort of coming for everything, as they put it,
Yeah.
all of your assets and your wealth are going to be under scrutiny by the court, and you need something to protect you and sort of the life you've built for yourself. So any sort of monetary asset, whether that's money, whether that's personal items, whether that's
Yeah.
stocks, whether that's a home, that needs to be covered.
Insurance policies, like life insurance policies, I'm thinking of those as well.
Yeah, so life insurance may have its own criteria. So typically these two are separate. However, in the event that somebody is looking to have you liquidate your assets because of a lawsuit, sort of all bets are off.
Yeah.
And you'll want this policy kicking in to protect you with legal expenses and et cetera to help you win this case.
Okay. Yeah, and the reason I'm just kind of asking these follow-ups a little bit is I don't think this is going to come to a surprise of anyone that's listening, but I feel like we live in a much more litigious world than we ever have before. And so, I don't know if you know of any stories that you can maybe share of individuals that had loved ones or neighbors come after them that sort of shocked them and tried to take their assets.
Absolutely. I mean, I worked in claims prior to starting my career in insurance. And, I've had individuals where they've hired a brother-in-law to come and, do some repair work on the roof or a gutter. That individual falls and is severely injured. And, without that personal liability policy, they are initiating a lawsuit, and those damages can be in the millions, depending on how severe the lawsuit was. So, or how severe the injuries were. So I think that it may surprise you as to who is willing to initiate that lawsuit, but when somebody's severely injured, and in this case they were paralyzed, they have no choice but to recoup those losses.
Yeah, wow. So it may not even be intentional in the fact that they're going after them. It's more of the covering medical cost.
Exactly, medical costs. Their life is severely affected now. That individual is not going to walk again. So, as much as there is that family tie there, they still need to have security in their own life. So they are going to come out.
Yeah, absolutely. It's terrible. And I know we talked about this very briefly when we kicked this off, but can you talk a little bit more about how the umbrella policy works with the existing coverage?
Yeah. So when you have a homeowner's policy, typically there is, say, a limit of 500,000. Once that limit is exhausted, so the claim has now exceeded that $500,000 threshold, the umbrella policy will kick in. It is not typically considered a separate claim. It's going to fall under the same claim circumstance. However, it's going to tap into that additional coverage. So if you have $2 million in umbrella policy coverage, that'll kick in above the 500,000 built into your base homeowner's policy. So you now have $2.5 million in coverage as opposed to that 500,000. These policies are structured to be a little bit more cost effective than just increasing that baseline coverage. If you tried to have $1 million or $2 million in just liability coverage built into your homeowner's policy, the costs would increase quite drastically.
Yeah.
However, with an umbrella policy, you're looking at, I've written policies for $10 million that cost $2,000 a year. So, this is very cost effective. Something that you want to have but never want to use, but it's better to have it than not to.
Yeah. And to your point of the $10 million umbrella policy right now, is the rule of thumb that your umbrella policy should cover, should really be able to cover all of your assets?
That's correct.
Okay.
If your home is worth $2 million and you have $5 million in a retirement account and potentially some cash on hand and autos, nice items within your home, you should be looking at, an $8 to $10 million umbrella policy as really just that additional coverage bump to protect you and your family.
Okay. Yep. Absolutely. And what life events do you recommend individuals reviewing their umbrella policy?
Yeah, I think
Or get one.
Yeah, if you have seen a significant increase in your income over the past, 5 to 10 years, or since you've had that first policy review done, you should take a look at that. If you've purchased any homes, maybe a vacation home, a rental home, you should definitely have your umbrella policy reviewed. If you have a pet or you've recently purchased a pet, dog bite claims are very frequent, so you should definitely have your umbrella policy reviewed to ensure you have coverage. And also, a lot of individuals don't do this, but if you've purchased a pet that falls in under the guidelines of a dangerous or malicious animal, which, I think all animals are great, but insurance companies do not. So certain breeds of dogs, such as Pit Bull, Rottweiler, German Shepherd, those
Mm,
dogs are excluded under the homeowner's policy. So I would definitely take a look at your policy, review that, and ensure you have coverage, because in that instance, your personal homeowner's policy will not cover any dog bite claims under that liability section, and as a result, your umbrella policy won't be there. So make sure your dogs are covered. But if you do have a dog and they don't fall under those guidelines, they will have coverage, but you'll need to ensure that you have enough to cover, in the event of a dog bite. If you are a landlord now and you have some rental properties operating, I would definitely suggest having an umbrella policy over yourself and your own home. But yeah, there's a lot of different scenarios that can come into play.
yeah, no, absolutely. And I'm just laughing because my youngest daughter has been begging for a German Shepherd for years. We are not going there. We already have two dogs, but that's interesting. That I did not know. And I know another one that comes up, Devin. I'm selfishly thinking of this, but my daughter's going to be driving in a year, right?
Yes.
And so if you have these kids that are approaching the driving age, that's usually another trigger as well.
That's correct. A lot of these umbrella policies, they're going to cover those lower limits on the auto policy. So, if your auto policy has limits of $250,000, $500,000, in the event of a multi-car accident, those limits are going to be exhausted very quickly. Specifically, if there's injuries involved, that can go right out of the window, and now they're going to be coming for your assets. So having an additional $1 million sitting over that, or $2 million sitting over that, is really beneficial. And honestly, if there's a fatality in that accident, that claim will reach the $1 million threshold. So it's something to consider.
Okay,
Yeah.
that's great. And I do also, I think this is you mentioned it so early on, but I'm going to repeat it because I think it's a really important one, is maybe looking back and reviewing your assets in your, if you are in a 401k, an IRA, or in any other investable account. I mean, the last 10 years have been
Yeah,
so robust in return, even with some of the corrections, that
absolutely.
maybe if you have that older policy, it may be worth looking at. So,
Absolutely. Yeah, you should definitely meet with your financial advisor just as often as you're meeting with
yeah,
your insurance advisor. I
yeah.
think the two, hand in hand, both are managing your risk, one from just a strictly financial standpoint and a sort of long-term overview of your finances, and the other from protecting your assets in the here and now. So,
Yeah. And maybe one last example that I'll mention, because you and I did this together, but we went to go visit a client and
yeah,
she referenced how bad their roof was and
yeah.
that they had someone coming over to fix the roof. And that was an interesting conversation that you had with her, if you want to maybe quickly go through that.
Yeah, I one of the biggest things I say is make sure they're licensed with insurance, because if they are not, and somebody is coming over to do any sort of work on your home and suffers any sort of injury, you are now liable for those damages. So, for this client, I really wanted to ensure that she had coverage, and so we actually bumped her umbrella policy limits. She was confident that that individual was licensed, but I said, do a double check and really ensure, because at the end of the day, you're just protecting yourself in the long
Yeah.
run. Yeah.
And one last point with this client, because it was interesting. She was very aware that she needed to increase her umbrella policy. And the reason she hadn't was because she had been told her husband was too old.
Yeah.
And so that was a little bit of a surprise to me. And you obviously did not have an issue in helping her with that.
Yeah, so some carriers, you know, there's different classes of carriers. There's middle market carriers, which are your State Farms, your Allstates, those carriers have some stricter guidelines as to when they'll increase limits, simply because those carriers don't like to take on a lot of risk.
Sure.
So carriers we work with, your Chubbs, Pure, AIG, Cincinnati, Berkeley One, they have higher limits available. So age is not really going to play a tremendous factor. Now that may affect the pricing.
Yeah.
It comes into play with insurance, specifically with driving and with these liability coverages, but they're not going to deny you the ability to increase your limits due to age. So if you are with a state farm, but you have, assets that would qualify for another tier of carriers, such as these high net worth carriers, I would say take a look at them, give them a chance, because you might be able to increase your coverages by utilizing them.
Okay. But for some of these larger umbrella policies, you may have to go to another carrier and sort of bundle everything together to create that efficiency.
Yeah, I always recommend bundling, simply from the fact that it's going to save you potentially thousands of dollars on your total premium with that carrier. But also, these carriers are not going to write just a standalone umbrella policy. So typically the entry level in this is the home coming along with the umbrella. But
Okay.
if you have an umbrella, I would suggest adding the auto as well, just so everything is cohesive and everything's under one roof. And you know that your limits on the auto policy are satisfying the requirements of your umbrella policy.
Okay, thank you. And Devin, I know I'm like firing off all these questions at you. But are there any, at this point, from what we've talked about, are there any misconceptions that come to mind about this that might be worth mentioning?
Yeah, I come across this daily with clients saying, oh, my job offers an umbrella policy, so I don't need. The misconception with that is a lot of times those umbrella policies offered by the employer are simply covering business related activities. So they're not necessarily covering your daughter who's driving, to go to a party. That's not covered under that. So in the event of a severe accident, there will be no coverage under that policy. So I always say if you do have an employer funded umbrella policy, to just take a look at that and really go through it with your financial advisor, with your insurance advisor, to ensure that you have the coverage in place that's needed. And then, of course, the other is that, I haven't had a claim. I don't really think I need this. I'd rather go. There's a lot of self-insurers out there. I think that's one of the more risky things you can do, simply because if a claim hasn't happened yet, it doesn't mean it never will. See trends that typically somebody suffers a claim once every 7 years that they're going to have to file. So that's not the same for everyone, but that's just a trend we've seen in the industry. Now, that claim could be very small or that claim could be very large. And I just think having the proper coverage in place at all times is sort of the best case scenario.
That's the average, huh? One in every 7 years.
Correct. Yeah.
Okay. Oh boy. All right. And how do insurance companies determine these coverage limits and premiums?
Yeah, so there's a lot of factors that go into play. So age is one, as we mentioned before. There's something called an insurance score, which is a combination of your credit score, your claims filing. So if you filed a lot of claims in the past 5 years, that's going to come into play in your insurance score. It's funny because I have some clients that come in and we do their full portfolio review and we offer a solution, and it's priced a little higher than they're expecting. Insurance score plays a major factor in that. And if they filed claims, or if they've been late to pay their insurance bill just because they've been forgetting and maybe they were a few months off a couple times here and there, that all comes into play. And that insurance score can increase your premium by hundreds, if not thousands of dollars going forward. So that's something I always like to consider. You can ask your insurance advisor when they're quoting, can they see the insurance score, and let you know what that is. But that's a major factor. In more recent years, we've had a lot of struggles with getting individuals insured who have filed claims. So if you have 2 water losses to your homes in the past, 3 years, you're typically uninsurable with a lot of these markets. And in fact, sometimes you have to go to the excess and surplus market lines, which is more expensive, not as robust coverage, and it's simply just a non-admitted solution. So you're not getting that name brand recognition of a Pure or a Chubb behind that policy.
Okay. Interesting you're saying that, as we are on the shoreline of Connecticut and just came off a terrible storm a couple days ago where I know some people were flooded.
Yes. Those, flooding claims related to weather, that sometimes we can sort of argue against. The carrier is going into that policy knowing full well that the home may be negatively elevated if they're willing to write. So those things but if you have a pipe burst or a pipe leak in your home, that scares the carriers, and they are declining those homes more frequently than not.
Okay. And do you find yourself, Devin, in that role of almost being negotiating for the client with the carrier?
Absolutely. I think you need to have an insurance advisor who's willing to have those conversations and not simply submit a quote and sort of cross their fingers and hope for the best.
Yeah.
We've clients at Howard and Gay that, initially were declined. We've had to call sort of up the chain of these carriers to plead their case. And in some cases, they've turned that declination around and actually offered coverage. So
Okay.
having somebody, just like having a strong financial advisor in your corner is important, having a strong insurance advisor in your corner is also important.
Yeah, and I think to your point earlier, recommending that you review these every year or so. And
Yep.
obviously you have your finger on the pulse of the industry and what's going on. I'm sure that the costs are varying all the time and the coverage all the time.
Absolutely. Costs primarily have been increasing drastically.
Yeah.
I'd say 5 years. So, not having a review done every year could potentially mean increases of 15 to 20% on your policy year over year. And after 3 years of 15% increases, you're now 45% over what you started at. So
Wow.
there are other carriers. Some are cheaper than others. You need to have an insurance advisor who knows what carriers would fit your home best and what price point you want to be at. That can be done very, very easily if that insurance advisor is sort of tapped into the market.
Okay. Okay. And I know with Howard and Gay, you're not tied to any specific carrier, right? And that's the flexibility that allows you to go out and price these out and negotiate, et cetera.
Yeah, if you're dealing with a State Farm agent, that State Farm agent is only selling State Farm products.
Yeah.
That's sort of their niche. With a brokerage like ours, you're going to have access to 10 to 12 different carrier markets. Each at a different price point, each at different coverage levels. We do our best to match each carrier's coverage to each other to show you what the difference in price is. And you're going to, some carriers may offer terms on your policy, some may decline. So we like to present a full portfolio to you, let you make the decision. We're not charging for these services either, so this is all complimentary, and you're not paying us anything going forward. We are compensated by the carrier. Now, a lot of people think that maybe that leads to some incentive for us to place you with a specific carrier. However, commissions are standard across the board. We have no ties to any specific carrier that we need to push business to. So we are really just looking to do what's in the best interest of the client.
Yeah, and I think with that comment that you just made, going back to that client that you and I were just with, you
Yep.
went to her with two options, and she
Yep.
chose the one that she felt was more appropriate.
Yeah, and the funny thing about that was the one she chose and the one that I was sort of pushing was the cheaper one because at the end of the day, you don't need to pay more for the same coverage due to name recognition of a carrier. So any carrier that we offer, we are confident in their claims handling ability. So I'm sort of one that says it's better to save the money and just and invest it than to spend. So.
Yeah, you've already taken that massive pool of insurance carriers and come down to a limited number, right?
Yep, exactly.
Yeah. Okay, that's great. And then what about recent trends in sort of this insurance space? What are you finding that are impacting these policies?
Primarily liability policies or just in general?
In general, I've seen additional add-ons. Like when I redid my umbrella policy about a year or so ago, I saw cyber liability.
Yeah, so with the trends in technology, constantly evolving, having cyber coverage is extremely important. You can have identity theft coverage built into your policy now. Some of those limits start at $100,000, but you can increase that as you wish. And that's just to cover if somebody steals your identity, and now you need to go through steps to sort of recoup that and get back on track. Cyber theft and sort of online theft is very prevalent in today's world. People are getting more and more sophisticated with email threat campaigns, spam, phishing. All of that is going to play a part in you losing money potentially and not having any coverage available. So having a carrier that offers that, and typically with our carriers, it's actually built into the policy. You can increase those limits, but a lot of them offer that as a standalone standard coverage. So having your insurance advisor ensure that that's there is very important.
Okay. And are there other trends that are being added in?
Yeah, I think right now the biggest struggle in the industry is just getting clients' accounts approved with the carrier. Carriers are extremely picky as to who they will take on. And oftentimes that carrier with the best premium and the best cost for you is going to be the pickiest at getting approved with. So, if your home has a roof that's, 10 to 15 years old or potentially 20 years old, I would say have somebody go out and take a look at that roof, have somebody licensed and insured go out and take a look at that roof, because one of the biggest trends we've seen recently is if the roof is showing any sort of moss or water condensation, and they're doing this via drone footage and satellite imagery. So if they see any of that, they may decline the home, or they may say, we'll accept it, but you need to have a licensed roofer go out and take a look, which could end up leaving you with no choice but to replace the roof on your home, which is extremely costly.
Sure.
That's something that I advise all of my clients, that if they can just have somebody take a look at that maybe once every 5 years to ensure that they're compliant, that's going to save them money in the long run. Another thing that's really a big trend right now is leak detection systems. So most of our carriers are offering sometimes thousands of dollars in savings for someone to install a leak detection system within their home. That's going to monitor water pressure within your pipes. And if it senses a leak or water pressure is losing in any area of the home, it'll alert your phone, and you have the ability to shut off water to that area to stop happening. So that's something that I can't express enough. If you have the means to do so, I would highly suggest installing one.
Okay, interesting. All based on these technological, advances.
Absolutely.
Oh, wow. All right. And so last question, but what's the process of adding the coverage?
Yeah, so you should reach out to your insurance advisor or a insurance advisor if you don't have one. Typically, they should ask to review your homeowners or your auto policies just to see what your coverage limits currently stand at. There may be a need to increase certain limits to match the underlying policy requirements for the umbrella policy. So that will be done. But if you're reaching out to an advisor like us at Howard and Gay, we're going to do a full review of your insurance portfolio. So we're going to take a look at your homeowners. We're going to quote you with the carriers that we feel would best fit your needs. We're going to potentially increase certain coverages. But, as we do this, we always keep in mind that we like to lower your costs, not increase them. So we're going to try to do that at a lower cost point for you. And then, of course, we'll add that umbrella policy on. But, this is where we can go hand in hand with your financial advisor. If you've done a recent assessment of your assets and you have that information ready, we can then very easily take a look at your umbrella policy and say, okay, we think we need to bump this to 5 million. You're now in a different level of sort of requirement there.
Yeah, absolutely. And I love that comment, because I talk about it all the time on this podcast about having sort of a team of professionals surrounding your family that are talking to each other, that can help each other make sure that you're building the most efficient solution for them.
Absolutely.
So thank you for that. So Devin, where can people find you if they want to reach out and don't have an insurance advisor?
Yeah. So www.howardgay.com. So that's HOWARDGAY.com. You can go on there and just simply put request a quote. That email will come directly to our agency, and I'll be able to reach back out to those clients. You can call our line, or you can call my cell phone directly. My cell phone is 203-451-4955. Let me know you're coming from the Jelena Ogilvie podcast. And we can definitely assist you. As I mentioned, there's no cost to you, to the client, for this. So even if you don't choose to move forward with our agency, that's no problem. We're here to help and just provide overviews of their insurance portfolios.
No, I appreciate, Devin. You're first of all, I don't know many though on my podcast that have given their cell phone, so that's very generous of you. But I think to that point, you are very responsive. You've been fantastic at simplifying, some of the intricacies of this process. So thank you for what you do, and I look forward to partnering with you moving forward with other situations as well, because again, I'm gonna end with where I started. There are not enough individuals that have an umbrella policy for the protection of their family. And I'm hoping and praying that following this, some of the listeners are going to go back and maybe review where they are with their assets in their family. And if they have a financial advisor, maybe they should call them and ask them to review it with them to make sure that they're up to date. So any last words, Devin, before?
No, thank you so much for having me. To anyone listening, with Jelena Ogilvie, you'll be in great hands. I've enjoyed partnering with you for the past, I think we've known each other for a year now. So,
Yeah.
it's been a great year, and I look forward to many more. So thanks for having me.
Thank you.